This is the Asia Trade. I'm Annabelle Droulers in Sydney.
And I'm Paul Allen. The top stories this hour. Asian stocks set for early gains as traders assess the rates outlook for 2026, with one Fed official backing an extended pause. AI sentiment getting a boost from Wall Street analyst upgrades.
Still in the tech space, China's more threads in focus. That's as it unveils a new generation chip lineup set to challenge AI developers' dependence on NVIDIA.
And the US pursuing a third tanker near Venezuela, with President Trump intensifying the oil blockade targeting Nicolas Maduro's government. Well, we've just opened for trade here in Australia. It's going to be a shortened trading week, of course, due to the Christmas break. We've got the ASX better by 0.5% at the moment. The gains all fairly broad-based. We've got IT stocks performing the best, up by 1.5%. A little bit of weakness on the consumer side of things. Nikkei futures, meanwhile, are better by 0.25% at the moment. Take a look at the yen. It's pretty soft right now. We did, of course, get the Bank of Japan tightening on Friday, as everybody expected. There is an expectation that there will be more to come. It's just a question of when. But in terms of that movement in the yen, the Japanese Finance Minister Satsuki Katayama signalling concerns over more rapid one-side FX movements. So there is the potential that we might see intervention coming, Bell.
Yeah, certainly intervention watch, I guess, continues well into 2026. But let's take a look at what we've got for the US session as well, because actually on Friday it was triple witching, and so you saw billions of contracts changing hands over there on exchanges. Trading volume as well, because of that, a lot higher than usual, but the overall fundamental picture really didn't change too much. So we saw a back-to-back advance actually in the S&P 500. That actually erased the weekly loss, and we're coming online this morning. Again, a little bit high here. Stronger performance we saw as well in the tech space. You saw the likes of NVIDIA, for instance, dragging the index higher, but it also names like Oracle, for instance, a jump of more than 6%. So maybe we're setting up for that Santa Claus rally into year end. But the other data point to note, of course, was that University of Michigan Consumer Sentiment Survey. And actually, when we got those numbers coming out, we saw sentiment amongst US consumers rising by less than expected in December. So a reading of 52.9, the estimate had been for 53.5. Lots of worries about the cost of living, essentially. The job market are taking their toll. But let's take a look at this terminal chart, because I think it's an interesting one, just around how we're actually seeing a lot of US investors that are pouring their money into US stocks. This is actually at near record levels. So clearly there's a lot of people that are betting on that US exceptionalism story to sustain. But when you take a look at the performance of the US benchmark, that's the S&P 500, over the MSCI World Index this year, that's excluding the US, you can see here that is it's been beat essentially by more than 11%. And we've only seen that 3 times this decade.
Yeah, we're seeing that phenomenon reflected also in the appetite for emerging markets really having a moment. And some of the big houses, JP Morgan, Morgan Stanley, see that persisting into 2026. A few reasons for this. I mean, there's a good tailwind there from the US dollar. A lot of these emerging market economies have been getting debt under control, getting inflation under control as well. And then there's the whole AI story as well. So for the first time since 2017, we've had the EM markets outperforming the US. Carry trade's been delivering strongest profits since 2009. But there's a couple of asterisks next to this. I mean, there's the China story with deflation, and India, which has been seeing outflows as well.
I do like it, though, because we've spent so many years talking about this is the year that the EM is going to outperform, and finally 2025 was it. Well, let's get more on where we go with this hopes. I said it around that year-end rally we see maybe for US stocks forming, but bringing out Bloomberg MLive strategist Tatiana Dari. So Tatiana, do we set up for that, a rally into year-end? Certainly if you look at history as a guide, it makes the case that yes, it could happen.
Yes, exactly. We're all on the lookout here for that center rally. It hasn't happened this year, so all eyes on this last week, because if you look at the monthly performance, it's still negative so far for the S&P 500, kind of, away from the tradition that this month is historically well received. Well, if we get the center rally, that would mean an 8th straight month of gains for the S&P 500. The last time that happens was in 2017. And if you look at how stocks fared the following January, for example, at the start of 2018, they had a really, really solid month. So if we have the Santa rally now with the major macro events out of the way, then that will boost confidence, and we'll really set up stocks for a nice start to 2026.
And one of the big themes at the moment, Tatiana, is whether this AI rally can continue or is a dangerous bubble starting to inflate. What's the case for and against?
Well, I think we cannot talk about AI in black and white terms anymore. I think the industry is moving into a 2.0 trade, call it if you will, from 1.0, where all stocks rose, on positive earnings expectations or just on new releases of models and things like that. In the 2.0 trade, we will see a lot more dispersion. We will see new winners and losers. It is very early to say who, but we're already seeing signs of that. If you look at the divergence between NVIDIA and Google, between AI-tied stocks and Google, as we've seen and heard in the numbers that OpenAI is losing share there in the market. So as all of these hyperscalers are working on new models, they're also all building their own chips, and that will chip away at NVIDIA's dominance in the market for years to come. And those new chips will allow them to get an edge with their own models. So the battle and the AI race will hit up a lot more in 2026. It will force investors to do their homework more closely, because it's not going to be a one winner takes it all. It's going to be a much more dispersed trade.
Yeah, and just to your point around chips, we were just talking about more threads there in the headlines, but you're even going to have competition from China starting to weigh in on this possibly. What is the outlook then for rates? Because we had, for instance, the Cleveland Fed President, Beth Hammack, saying that monetary policy is in a good place for now. Do we see more easing from the Fed, or do we start to shift our attention back to that risk of inflation reigniting once again?
I think basically the Fed's Hammack comments really reiterated two things here. One, that the Fed is squarely on the sidelines now. Remember, they told us they are on the sidelines back in November, or the last time Powell spoke before that December meeting, but the data forced them to turn around and do one more cut before the year was out. Well, we heard the same messaging from John Williams on Friday, that there's really no urgency to do more. It's the time to step on the sidelines and let things play out. And the market agrees with that. If you look at the pricing, nobody really expects anything from January. The debate shifted to March already. And between now and then, there's a lot of time that things can really change. And the second thing that her comments highlighted is the division among the Fed, right? I mean, we know the Fed is sort of on an easing trajectory. If you look at market pricing, that's what it tells you. But there's a lot of division there. I mean, the Fed's Hammack and Austin Goolsbee and Governor Schmidt, those two dissents that we saw at the last meeting, that tells you there are members there that are still very inflation worried. And on the other side, you have somebody like Governor Waller, who is interviewing for the Fed chair position, who is, clearly more dovish and more attuned to the labor market risks.
Tatiana, you say things can change. I mean, another wild card is possibly by the end of January we're looking at another U.S. shutdown, and that would mean more Swiss cheese shutdown data. Is that going to make things interesting for a March Fed meeting as well?
Yeah, exactly. That's a great point, because it really speaks to the broader. If you look at, there's so many wild cards for the U.S. stock market in 2026, beyond the probability of another shutdown, which we know could impact data and just clarity on the economic front and really hurt confidence, frankly. We also have the midterms. Let's not forget about that. It is a midterm year. We know historically those tend to be very poor for the stock market. Drawdowns can be as high as 15% during those periods. And we also have the Fed chair nomination, which we, don't have clarity on at this point. And also the Supreme Court decision on tariffs. That's a big one for markets that expected to come in early 2026 and could really jolt assets anew here.
All right, Bloomberg MLive's Tatiana Dari, thanks so much for that. Now, Bloomberg's been told the U.S. is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. Bloomberg editor Tony Chuchka joins us now with more. So, Tony, tell us a little bit more about this ship that the U.S. is pursuing.
Well, we're actually not getting an awful lot of details about it. It's called the Bella One, as far as we've heard, a Panamanian flag tanker that was en route to Venezuela to load oil. And the bigger picture is that this weekend And I think what you're showing now is an earlier one that was intercepted by the U.S. Early Saturday, I think. But the bigger picture is that over the weekend, this kind of noose that the U.S. that the Trump administration is trying to tighten economically around the government of Nicolas Maduro and Venezuela has been tightening. At the same time, the government has not been very forthcoming. It's sort of come out in dribs and drabs, but the overall purpose is very clear, which is essentially to deprive Venezuela of its main revenue, which is oil exports.
And if indeed that does work, and you see that production collapse, and then you see that social unrest off the back, what's actually the fallout from that, and does that actually achieve the Trump administration's aims, do you think?
Well, that's several steps ahead, and of course, this has been the whole sort of dilemma here, I think, for the Trump administration in general. The base, the so-called MAGA base, sees Trump as someone who doesn't get involved in foreign adventures. There most likely won't be any U.S. troops on the ground in a very large country that is Venezuela, but at the same time, there is this pressure campaign on ostensibly over drugs coming in from Venezuela or via Venezuela. We saw that the administration has declared the Maduro government a foreign terrorist organization. But the strategy for now appears to be basically what we have been seeing. What is the next step in that? Well, if the administration keeps this up, it should make it more and more difficult for Venezuela to keep its lifeline of oil production going. Ships have been turning back as far as we've seen the reports, and that just creates a very difficult situation, or an increasingly difficult situation for Venezuela.
Yeah, Tony, tell us a little bit more about that, because, of course, if Venezuela's unable to load ships, can you give us a sense of the pile-up that's happening on land?
Exactly. That is the sort of the next stage in this. After a while, if you follow this theory or this scenario further down the road, after a while, Venezuela will no longer be able to export oil. So then it will have to start shutting down wells, and after, ultimately that is a path to more or less economic collapse. And then what happens then would of course be the next move by the White House to take in this whole pressure campaign.
Tony, thanks so much for your time, and we'll continue to, of course, monitor this blockade, or these blockades taking effect. That was our Bloomberg editor, Tony Schutzko, there. We'll have more ahead on the Asia trade. This is Bloomberg. Well, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files includes thousands of pages of pictures, phone records and notes from investigations, with many documents heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasize that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
The top global headlines that were following: President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime would create a major administrative problem. Judges are currently weighing a legal challenge to the tariffs that Trump has imposed on dozens of nations. Kevin Hassett says the challenges of refunding the levies should deter the court from ruling that way.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
China has criticized the latest US weapons sale to Taiwan, saying it raises the chances of conflict between the two superpowers. The US last week approved arms sales worth up to $11 billion, including missiles, drones and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a powder keg. US Special Envoy Steve Witkoff says Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. He says discussions covered the existing 20-point peace plan, a US security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. The US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying F-16 fighter jets launched Friday night bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. Bell.
Yeah, taking a look at what's happening in the early moments of Aussie trade this morning, because we've actually seen Aussie silver miners are really, again, extending their gains today, because we've seen silver rising to a record. We're above 67, near 67.50 an ounce, but essentially, of course, benefiting some of these names that are listed in Australia. So you're seeing silver, again, rising to a fresh record. We'll get that typo corrected. But more ahead on the Asia trade. This is Bloomberg. The latest from the corporate front this morning, and President Trump has announced deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK come in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Meanwhile, the former TikTok CEO Kevin Mayer says he's confident the US majority ownership plan for the social media platform will unfold seamlessly. Mayer also told us that it's a show of faith in Oracle, which is among the companies leading the JV.
I think it works operationally. I think having a company like Oracle, a very trusted company run by Larry Ellison, who's a trustworthy figure, obviously, being in the center, in charge of looking after and securing that U.S. data, that's crucial. And I think they're licensing the algorithm from China, so ByteDance will still own the code, but I do think this license will take another instance of the algorithm, all the code, put on Oracle servers, and then trained on the U.S. data that Oracle alone has access to. So I think it's going to end up having a vastly different feed and sort of content algorithm than you'll see around the world. So I think that will work. And I think that ByteDance will, is now below 20% ownership, 19.9% ownership. That's a substantial difference from status quo. And I do think that ByteDance has an operational role commercializing TikTok, selling ads, making sure e-commerce works and all the other commercialization factors. But really, it will be run by a U.S. board and it'd be a separate U.S. company.
Kevin,
it works.
It works, but the proof is in the pudding as to whether the algorithm is as powerful. How do you see, as someone who's in charge of content development and wanting to get your content out there in a marketing capacity, do you have confidence that it will be as good without ByteDance as heavily involved?
Well, I think it probably will be. There's a lot of intricacies and a lot of AI, that's the word of the day, in that code. And I think that code base being kept intact is crucial. I think had they tried to recreate a new algorithm from scratch because of security concerns, that would have been exceedingly difficult. That has taken years and years and thousands of engineers in China to develop this very sophisticated AI recommendation engine. So the fact that they'll have access to that, it will remain interoperable with all the other TikTok instances around the world. I think that matters quite a bit. And I think just retraining that same code base, that same algorithm with US data should provide a very robust solution. I think it will be seamless.
That's former TikTok CEO Kevin Mayer speaking there with Bloomberg's Caroline Hyde. We have more to come on the Age of Trade. This is Bloomberg.
We're 30 minutes out from the open in Japan and also in Seoul this morning. We've got Aussie stocks as well, 30 minutes into trade, and we are looking like we're going to see a day of gains across the board here. it has been a positive end to the US session on Friday on Wall Street, and we actually saw the S&P 500 erasing its weekly loss. So investors are maybe starting to think or believe that a Santa Claus rally could be possible. And actually, when you take history as a guide, yes, we do typically see equities or stocks moving higher in December. But lots of different factors for markets to be focusing on, and you've still got that expectation around the Fed. We had the consumer confidence figures, for instance, showing a deterioration in sentiment, but also as well closer to home. I mean, you had that BOJ hike on Friday and indicating that further easing is in the cards for 2026. But let's also take a look at what's happening in the China tech space, because one of the big companies and one of the best known startups, that's More Threads, of course, that listed just recently in mainland China, they actually had an event over the weekend where they introduced a new generation of chips aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's bring in our China correspondent Min Lo in Hong Kong. And Min, yeah, so new products that were announced. What can you tell us about those, and how do they also compare to the lineup that we see with NVIDIA?
Yes, the company has introduced 2 new generations of chips and a new GPU architecture as well. The chips are known as Huashan and Lushan, so they're named after Chinese mountains. The Huashan chips, according to the CEO, is better than NVIDIA's Hopper series chips, so that includes the H100 and H200, and he says it is catching up with the current Blackwell series. So this is quite a significant development, because if Chinese homegrown chips are better than the Hopper series, then there is no reason for Chinese companies to buy from NVIDIA, even after the company has gotten approval from the Trump administration to sell the H200 chips to China. So that's certainly one thing to watch. They also unveiled the Lushan chips, which are meant for graphics processing, and the company is saying that has 15 times better performance for gaming. And the company also unveiled this GPU architecture that will enable the linking of 100,000 chips together in a supercomputing cluster, and also claiming that it is 10 times more energy efficient and is able to increase computing power by about 50%.
Min, one thing to have the chip, but another thing to scale it up and mass produce. What are the key bottlenecks the company might be facing at the moment?
Yeah, so the company says they are going into mass production next year, but of course the manufacturing front is always a bottleneck for China, right? Because they are mainly relying on a couple of big foundries like SMIC, Huahong, and SMIC's technology is still several generations behind, the 2 nanometers or sub 2 nanometers chips that TSMC is working on. So they're still restricted when it comes to the lithography machines. The other thing is that More Threads runs on its own proprietary computing platform known as Musa, which is positioned as equivalent to NVIDIA's CUDA platform. So companies that have their software built around NVIDIA's platforms will require some level of adaptation to make it compatible with More Threads architecture. And on top of that, when you talk about the supercomputing architecture as well, a lot of it will depend on the interconnectivity. So in terms of end-to-end bandwidth, in terms of the network fabric as well, the actual hardware that connects the chips together, and the topography, how the chips are laid out so as to increase efficiency. We didn't get a lot of details on that from the company. So a lot of the efficiency and how it really works and when it's being implemented, that still remains to be seen.
Great stuff. That was our China correspondent, Min Lo there. So let's shift from competition, I guess, between the US and China, but also take a look at big tech's dominance of AI infrastructure, because that's certainly shrinking as a host of other players pile into the arena. Their emergence marks a fundamental change and points to a new set of risks. That's as less experienced firms join the fray. Bloomberg's Seth Fiegerman joins us now for more on today's big take. So, Seth, it's a super fascinating piece, and I think it really just spells out really clearly how names like Amazon or Alphabet that have really dominated AI infrastructure to date are actually not going to possibly have as much influence or control, even just in the space of a few years' time.
Yeah, that's right. I mean, certainly it is the result of these big tech companies and their bet on AI that we are in this situation at all. But what we're seeing is that in the years ahead, a lot of the data centers under construction are not actually from the tech companies you named, but from a host of thousands of newcomers who today have little or no computing power to speak of. And as we detail in the piece, these range from a TV show host in Canada to kind of a lesser known firm in Italy, to a bunch of, crypto firms that kind of rogue one bandwagon might be jumping on to another. And there's a sense in which that could be good because it diversifies the risk a little bit. It's not all one industry betting here, but it also spreads out that risk to a bunch of players who are now going to presumably have to take out billions of dollars in financing, whether through debt or equity, to support these ventures, which, again, at the moment, there are not that many gigawatt-sized data centers in the world, and all these people that I've named and others are trying to build ones comparable to that.
How are some of these newcomers meeting their power demand needs?
Yeah, I mean, again, it ranges. We refer to one in Italy who previously has no experience building data centers, but does have experience working with energy and that sector, so may have relationships there. We talk about Kevin O'Leary, who is famously of Shark Tank fame, and has lined up some power agreements, it sounds like, in Canada and Alberta. But when we talk about gigawatt facilities, we're talking about facilities that use the equivalent of an entire nuclear reactor. They're facilities that are large enough to power 750,000 U.S. homes at any given time. I mean, these are extraordinary endeavors, and even large tech firms today have admitted that they're struggling to get all the power that they need, and they're also often waiting years, potentially, to get on the grid, depending on which market we're talking about. So it is not an easy task, but it is one that a lot of these firms feel like there's a lot of upside.
Yeah, just given the challenges on that front, and then you combine it as well with just, I guess, a general level of inexperience with this kind of project as well. What are the downside risks in this scenario with just having so many new entrants in the space?
I've been covering this now for a few years. When people ask me about the risks and the potential of a bubble a few years ago, I'd say, well, if you were Meta, for example, they already spent $70 or $80 billion on the metaverse, and with mixed returns, but they had such immense resources that they could do that and keep going. It is very different when you're talking about unprofitable startups, which is what we often do with OpenAI, Anthropic, and others. But even those firms have access to tremendous amounts of equity. What we're describing in this piece is almost a different cohort entirely. I mean, these are firms that may well be able to get the financing that they're looking for and what they need here, but every gigawatt facility costs tens of billions of dollars to build, and we're talking about some here who have aspirations to build 10 or more gigawatts. So quite a lot of financing and debt to take on.
Seth, you've obviously spoken to a lot of people when researching this piece. I'm just wondering if there's any sort of overall theme or any agreement on whether AI is in a bubble or not.
Certainly these companies that are betting on this don't think so. They think quite the opposite, that there must be tremendous road and runway ahead for AI. And I think that mirrors what you hear a lot in Silicon Valley. Yes, there may be peaks and dips here as we go in the next couple of years. And yes, people may kind of retreat a little bit from certain valuations that we see, certainly in the private sector. But the entire world sort of mobilizing behind this new technology and speaking out adoption here, the fact that ChatGPT has been adopted in one of the fastest fashions that we've seen with more than 800 million users, and the fact that governments all over the world, from the US to Saudi Arabia to European countries, are putting their own might behind this, I think gives some of these firms and some of these newcomers confidence that we should take this risk because there's tremendous runway ahead. But again, there is a risk no matter what.
Yeah, it's really hard to gauge demand versus supply, and obviously right now the demand is far outstripping the supply that's available. I do wonder if you sort of forecast out, say, 1 or 2 decades, are we going to end up possibly in that position of overcapacity? And then just going back to the different cohorts that you spoke to, are there names or groups that you think are perhaps better positioned to withstand any sort of corrections in this space?
Yeah, I mean, first off, you're talking about 10 or 20 years out. I think there are firms that are struggling to forecast, 2 to 3 years out. And we note in this piece that, Dario Madai, the CEO of Anthropic, has said that there's this fundamental dilemma for all of the AI developers right now, that it takes a couple years at least, of lead time to build out each of these data centers. So you are making a gamble, a bet about where you think the benefits and adoption of this technology will be 2-3 years out, and nobody knows for sure. So that's a key part of the dilemma here. To the other question that you ask, again, the biggest tech firms are probably the ones that are best suited to weather any dips here. And I think you hear that a bit from the CEOs. If you're running Microsoft or Google right now, and you overspend here by, even $50 to $100 billion, like you can probably weather that. But if you are a private company or a new upstart and you do the same, that is much harder. And I think a big part of this story that we're telling, what we told before, is that some of the tech firms, including Microsoft, are doing more business with the neoclouds, with some of these upstarts, because it actually does let them offload a little bit of that risk to a different contingent and kind of keep some of the debt off their balance sheets and allows them not to be solely responsible for all of the actual physical costs of the build out here. And that means the newcomers assume a little bit of risk as they go.
Seth, really great reporting here, and it's a really fascinating big take with a lot of great graphics as well that tell the story. But that is Bloomberg's Seth Fiegerman there joining us on today's big take. If you do want to read that, encourage you to read it in full. It's on the terminal. You could subscribe as well to the big take. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how Japanese assets are tracking at the moment. The yen in particular, range-bound after the BOJ tightened on Friday as expected. The timing of the next increase, though, well, it's anybody's guess. The Finance Minister, Satsuki Katayama, meanwhile signalling concern over rapid one-sided FX movements. So the yen remaining in tight focus. Nikkei futures look like they're setting up for a pretty good day. All right, let's get to our next guest now. Shuntaro Takeuchi is portfolio manager at Matthews. Let's get a bit more of an outlook on his expectations for Japanese assets in 2026. So, Shuntaro, I want to start with the level of the yen there. I mean, it is in that tight range. How long do you think this is going to continue, and what will be a catalyst for it breaking out in either direction?
Japanese yen to continue to be range bound, despite U.S. Fed cutting rates by 75 basis points and BOJ raising by 50 basis points in 2025. The currency stayed mainly in range this year. Japan's real interest rate still remaining in negative territory could be one reason, but moreover, I think real demand of U.S. dollar buying and selling Japanese yen has been increasing compared to 5 to 10 years ago, with flows such as continued energy imports, also U.S. dollar-based cloud service payments such as Amazon Web Services, and also Japanese retail investors buying U.S. equities via NISA accounts. These three flow factors, inbound tourism spending is not enough to offset these flows.
So how much tightening do you think is priced in Japanese equities now? Because, Governor Ueda was somewhat equivocal when he was asked what the neutral rate is. So what's the market telling us?
So the current consensus, we're looking for one more rate hike this year, which has already happened, and also for next year, one more. But I think the consensus has moved to two more rate hike next year. However, listening to BOJ Kuroda's comment, he did not actually comment on the pace of the rate hike. So I would say the current consensus is hovering somewhere between 1 and 2 more rate hikes in 2026.
Yeah, we also didn't get too much clarity around the neutral rate as well. Where do you think that actually sits? And just talk to us about the challenges of determining it.
Yeah, sure. I think that's a very good question because, Japan has been Japan's inflation has been non-existent for close to 30 years. So this is like a completely new battleground for the whole country. And at the end of the day, where we see in the real interest rate remains to be key, and especially for BOJ rate decisions going forward. In terms of the macro factors, real wage growth being positive will be extremely important for the domestic economy. And that's where we focus on.
What happens then for JGB yields as well, and what's the implication for that? Where do they go from here, do you think?
So 10-year JGB yields rose about 2% after the rate hike. We view this as a rather normal reaction towards normalization of the economy. Whether Prime Minister Takeuchi's fiscal expansionary measures could uplift the domestic economy remains to be seen. But pro-growth policies are generally positive.
All right.
Shuntaro, I think we're just having a couple of audio issues there, so we'll leave that there. But that was Shuntaro Takeuchi, their portfolio manager at Matthews Asia. And shifting now to what has been a record year for deals involving Japanese companies, because transaction volume is approaching $350 billion as December draws to a close. Next year, it's poised to get even busier. Let's get the M&A outlook with Bloomberg senior editor Reed Stevenson. So, yeah, Reed, just talk us through that. Why are we expecting it to get even busier next year?
Well, I mean, this has been a years-long trend where essentially, improved corporate governance and a lot of cash and value trapped on Japanese corporate balance sheets has really sort of, bubbled up to a point where we're seeing this massive kind of increase in deals. Indeed, as you said, for this year, we saw quite a few. There was Fujisoft. There was the pursuit of 7&I by Couche-Tard of Canada. And then, of course, the take-private proposal for Toyota Industries, which is probably going to be the biggest ever take-private deal. That was sort of announced, and then we're going to see that get going in the new year. So, yeah, indeed, as you say, we're just going to see a lot more action here.
Reed, you mentioned the 7&I deal. Of course, that sort of hit the rocks. And, I mean, we do see this happen from time to time in Japan where deals just don't make it for whatever reason. Do you see governance reforms as changing that?
Well, I think it's a situation of, a few steps forward and a couple back. In a way, the 7&I deal was interesting because although it didn't actually happen, the company itself made a lot of changes. It changed leadership. It essentially broke into parts and really sort of accelerated its own sort of need or effort to essentially unlock value for investors and shareholders. And so in that sense, you can say it's working. A way in which maybe it's not working is a lot, you have to keep your eye on a lot of these sort of take private deals, especially between parent-child companies, where essentially you have the controlling entity buying the company or taking the company back into the fold on the cheap at the expense of minority shareholders. The NTT Data deal there could be seen that way. And of course, we're seeing a lot of noise around Toyota and Toyota Industries, or I should say the Toyota Group and Toyota Industries. Elliott Asset Management has stepped in to say, look, the price needs, well, they're not saying the price needs to be higher, but they say the price is too low and it doesn't justify the actual intrinsic value of the company or even the assets on its balance sheet.
Into next year, then, are there any specific geographies where you think you might see acquisitions by Japanese companies, or are there specific sectors you're going to be focusing on?
Yeah, one really early thing we're seeing is within the finance space, actually. You have Mitsubishi going after an Indian counterpart. So it'll be interesting to see how the banks essentially, apart from being involved in deals and financing them, they themselves becoming the target of or the target for deals.
All right, Bloomberg senior editor Reed Stevenson there. Now you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. Subscribers can also watch live on the terminal using the TV Go function. We have more ahead on the Asia trade. This is Bloomberg. Amazon Robotics says it's preparing its workforce for how tech and AI will impact hiring and career paths. Its chief technologist told Bloomberg the company is already using physical AI and robotics at scale to help employees.
When we think about robotics and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated through our other manipulation systems. Or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is going to allow us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means doing away with workers, but maybe it means that you will have to hire fewer workers in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use that every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
That was Amazon Robotics Chief Technologist Ty Brady speaking with Bloomberg's Carol Massar, and taking a look at the market action as well, because we are just about an hour into trading now for the ASX 200, Nikkei futures, and also Seoul about to come online. But tell you what, Paul, I think it really feels like the holiday mode is already well and truly set in Australia.
Oh, absolutely. And it's always the case at this time of year. I don't know if our viewers can make out the Harbour Bridge behind us, but there's a lot less traffic on it. There's hardly anyone on the train. The streets are quiet. I mean, we're done on Wednesday afternoon, so it's safe to say a chunk of the country already at the beach. But we're seeing some pretty decent gains here, and some of the real outperformers, Bell, silver miners, having another moment. Yeah, we've seen silver actually hitting a fresh record. So again, we just continue to see that real performance in the metal space across the board. But also we're setting up, maybe we get that Santa Claus rally if you take the action on the Wall Street session at the end of last week into consideration. More ahead. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens this morning. We're actually setting up for a day in the green. At least that's what futures was indicating to us. But it does track what we had in the Wall Street session on Friday, because we saw another advance for the S&P 500. So back-to-back gains actually erased all of the losses we'd seen earlier in the week. And we saw U.S. stocks, particularly the tech sector, moving higher. Again, you're seeing that reflected. NASDAQ futures continuing just to show some gains there. But the tech sector is still going to be the one to track. And also the issue, the longer-term issue, is really that outlook around the expectations for rates, because we are expected to bring global tightening in 2026. How much of that has actually been priced into equities at this stage? But let's take a look at the Japan Open today, because you're 1.9% again indicated in futures. We will be watching that tech sector. We're also continuing to track the financials one too, given that you had the BOJ decision on Friday and you saw Governor Ueda signaling, some differences or some challenges of determining where the neutral rate should actually sit, but still indicating that the path is toward further tightening, and maybe not getting too much on the cadence of that, but we were just speaking earlier in the last hour, but the expectation maybe for 2 more hikes next year as well. So you've got, again, as I said, the Nikkei 225, 1.1% to the upside today. That's the story there. The Japanese yen, again, you're continuing to see it hovering, so past the 155 mark, but around 157.61. Let's change now, take a look at Korea, because we actually just had the Korea trade data coming out for the first 20 days of December, and we actually are continuing to see exports rising here, so a gain of 6.8% on the year. The trade surplus as well coming in at 3.185 or 1.815 billion US dollars. Imports as well fractionally high, but of course that big
big focus is on the export figures, given that Korea is sort of seen as a global bellwether on this front, and we have seen these export figures just jumping around a little bit over the past few months. It's a slight drop from the November figures as well, but that is the state of play there for the Kospi. Again, you're seeing some gains here across the board and reflecting that story around tech on the US session on Friday, where we saw Nvidia, for instance, gaining, Oracle up more than 6%. Joining us now is Vasu Menon. He's the Managing Director for Investment Strategy, OCBC, to talk more about really the market action and where we go from here. So Vasu, I think one of the key questions for investors, big questions, is are we setting up for the Santa Claus rally?
Well, you know, that's a hard one because we've had a very strong rally already so far this year. Global equities up something like 19%, if I'm not mistaken. US equities 16%, and if you look at Asia and Europe and China, for example, in US dollar terms, they've gone up more than 25% each. So we've had a very strong rally. I wouldn't be surprised if we close the year on a slightly higher note. But I think 2026 is going to be a challenging year, but we remain positive on the outlook for 2026. We think that at the end of 2026, markets will be higher than what they are at the end of 2025. But the next couple of weeks, as you said, the Santa Claus rally, that's a hard one to predict, but I wouldn't be surprised if the markets actually end the year on a higher note because, you know, we've had quite a number of tailwinds helping the markets to actually scale new heights in recent days and weeks.
Yeah, let's talk about the state of play this year, because we've got a chart actually where we can see just the sheer underperformance of US equities versus their global peers in 2025. We don't see that too often, I think really 3 times in the last decade or so. Do you see also that being replicated next year, or do you think that you can actually see US stocks starting to outpace those from elsewhere?
Well, I wouldn't be surprised if US stocks continue to underperform other regions. My own sense is that, you know, fund managers, global fund managers appear to be more receptive to opportunities in Asia, ex-Japan, in Europe. And I think that is also borne out in the valuation data, you know, and I was looking at the valuation data on Bloomberg terminals before I came for the show. And if you look at the MSCI USA index or the S&P 500 index, which measures the US stock market in terms of forward PE ratio, it's trading close to 2 times standard deviation over a 10-year history. In comparison, if you look at Asia ex-Japan, you look at Europe, for example, they're trading below 1 standard deviation. So in terms of valuations, you know, you see better value in other regions outside the US. So I wouldn't be surprised if the US stock market continues to underperform in 2026 as money rotates out of the US into other regions.
Yeah, which... You mentioned some of those challenges that stocks might have next year. Which are the big ones that you're looking at, do you think?
Well, you know, one of the key challenges I think we'll be looking out for in 2026 would be how Trump deals with the Federal Reserve and Fed independence. I think that's going to come to the forefront as Jerome Powell steps down in May and as Lisa Cook's, you know, trial in the Supreme Court. You know, the outcome will actually also determine market perception about Fed independence. So Fed independence is going to be quite critical, we think, in 2026. And how Trump deals with it, I think, will be quite important. And, of course, the US midterm elections at the end of next year, in the run-up to it, you could see geopolitical risks go up, a greater US-China tension. That could also, you know, figure on how the markets perform. But overall, we think there are more tailwinds than headwinds in 2026. And the market should still end the year on a higher note despite volatility, as you saw in 2025. 2025 is a very volatile year, but still, the markets are going to end the year on a pretty strong note. I think you're going to see the same story play out in 2026. There'll be challenges and headwinds, as I mentioned, but I think the markets will be able to overcome them and still close on a higher note at the end of next year.
Do you think markets have fully appreciated as well that risk that we at least see maybe the end of easing cycles, even the start of tightening cycles once again? I mean, that's a factor we've been talking about, maybe being a little bit underappreciated by investors right now.
Well, I think, yes, it is starting to come to the forefront to some extent. The markets are starting to worry about the Bank of Canada, the RBA, the ECB even, possibly hiking rates. But I think it's still a bit premature. It looks like the Fed will probably continue to cut interest rates in 2026 at least one time. And I think the Fed is a key part of the whole global equation. And the Fed, we think, is going to continue easing. I don't think the Fed is going to tighten anytime soon. And other central banks like the ECB, for example, they have signaled, but I don't think they're ready to tighten anytime yet. I think that could be a story that could come into play in the second half of 2026. But even then, I don't think there's a lot of latitude for central banks to tighten in a big way, because there are global headwinds as far as economic growth is concerned. So there could be some signals from central banks, but whether they're ready to move and derail the global economic recovery and financial market recovery, I'm not sure if they're ready to do that right now. But in any case, I think it's more a story for the latter half of 2026.
What's your expectation around China as well for next year? We've seen again those issues or concerns around the economic weakness coming to the forefront for equities once again. But at the same time, obviously the dominant theme for this year has been that tech and innovation-led story. And you see the CSI 300, for instance, up around 40% so far, or on an annualized basis. But still, what's your expectation for where we go for next year?
Well, we are positive on China. China is one of our stronger conviction calls. We are positive on Asia ex Japan. And within Asia ex Japan, China is one of our strong conviction calls. And as you said, the Chinese economy is not doing fantastically well. In 2025, that was a story as well. The economy faced a great deal of challenges. But look at the stock market. It's done exceptionally well. The MSCI China index is up 30% year to date. So it's outperformed the US in a big way, almost double the performance of the US stock market in terms of the MSCI USA index. So we think that China will continue to perform in 2026 as well. The potential for fiscal stimulus, monetary stimulus, valuations are not expensive, and Chinese households have a huge amount of savings. More than $20 trillion in savings. That's got to find a home, and that could, and not just that. I think global fund managers are also starting to put more money into China, and so put all that together, it means that the Chinese stock market has more upside. Again, it will not be a straight line climb; it'll be volatile, but we think that there's more upside.
Vasu, really great to have you with us, and best wishes for the end of 2025, the start of 2026 as well. But that was Vasu Menon there, Managing Director for Investment Strategy at OCBC. And let's also take a look at one of the big movers so far in the Tokyo session, because we're watching NIDEG very closely. This is the world's largest maker of mini motors. They actually put out a statement on Friday late in the afternoon, but talking about the founder who's going to be stepping down from his position as chairman of the board. There's been the discovery of accounting issues that have damaged the reputation of the company. So Nagamori is going to be remaining involved as chairman emeritus and says he's going to be entrusting all of the future management to the CEO, who's also going to be taking his position as chairman. So the company has been dealing with a growing number of suspected cases of improper accounting that's triggered filing delays, credit downgrades, and as well the risk of delisting. So you can see investors obviously appreciating that the chairman is resigning from the board amid these accounting issues. More ahead. This is Bloomberg. We're taking a look at some of the commodities this morning, and we actually are seeing gains here across the board. So you've got silver, for instance, hitting a fresh record high. Rate cut bets, geopolitical woes as well are playing into that complex. But spot gold as well, you're seeing some gains here within $40 of an all-time high for that, having risen, of course, for the last couple of weeks. Brent crude, WTI, also we're going to be tracking those because we are just monitoring really the, again, geopolitical story, but seeing an advance there on this story that what Bloomberg's been told, which is the US pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. Let's bring in Stephen Sapczynski, who leads our Asia energy coverage. And Stephen, of course, we don't see a lot of output from Venezuela, at least in a global scale, but what are the market implications you're watching from this?
I think, they produce less than 1% of global exports. But at the same time, I think this is oil that is used for certain refineries in China. You will see, I think there is a close look at what is going to happen now with the rest of those flows, right? Are we going to see, you have a third tanker in pursuit. Will now we see a total collapse of production? Will we see a total reduction in exports? I think that's going to be what the market is going to look at very closely. Also, over the last week and a half, is this it for the Trump administration? Are they going to go more? I mean, it really does seem like they're ratcheting up pressure. And then there's regime change, right? Exports are falling likely from now, going to be lower. But if there is regime change, I think the next thing, now we're looking further out, there's a lot of possibilities on what happens. But if there is a successful regime change, what does that mean for oil production in Venezuela in the future? Because there is a lot of oil. There's a lot of potential to export that oil. They have the infrastructure in place. They just need the investment, and maybe they need a different leader that's friendlier with the United States.
Yeah, so what are the sort of different signals that you're watching for that? Because, as you said, it's that pressure on production from Venezuela. I mean, what can we see, for instance, in terms of storage tanks that might tell us exactly how far we're off any sort of production disruptions?
Well, I mean, I think, just looking further out, we can look at the storage tanks. You can look at how many ships are being sent out. But I think right now, when you just look at the ship tracking data, when you look at the satellite data, if we start to see a significant reduction or a large U-turn in the vessels that are going to Venezuela, that's going to be, I think, what the market is looking at. If the ships aren't going to Venezuela to pick up the oil, if there is a reduction, it doesn't matter what's in the storage tanks. They're going to have to reduce their output. And then also, I mean, that's just one piece of a much larger, complex geopolitical issue. What else does the Trump administration do to put pressure on the country, to put pressure on its industries that will also reduce output from their fields?
It's an interesting story as well we've got out this morning, looking at the link of Chevron to this and how they're also steering quite a risky path through Venezuela. What can you tell us on this front?
Well, I mean, so Chevron, I think there was a lot of interest as to whether or not Chevron would be able to continue their output. But it does seem that the Trump administration has allowed this. We've had the Chevron CEO say that they see assurances that they can continue producing. And what's interesting is, they've stuck there the whole time. They've been there for a very long time. And they do see a pretty rosy outlook for the country in terms of their oil production there. So I think that is part of the dichotomy, and I think part of the interest is there is the sanctioned aspect of Venezuela crude, and then there's the non-sanctioned aspect of it as well, and those non-sanctioned barrels will continue to flow. Now, of course, going back to the tankers and the seizures, what's so interesting is that when the Trump administration boarded the Century's vessel over the weekend, that was a non-sanctioned vessel. Yes, they were dealing with sanctioned crude, but they weren't sanctioned itself. So while Chevron does seem to have the go-ahead, there is this weird gray area where there are vessels that aren't sanctioned that are going there that are going to have to figure out whether or not they can continue, whether or not that they can take the risk of the Trump administration because they don't have a set go-ahead. So between Chevron, the sanctioned vessels, as well as those in the middle, there's quite a lot of different aspects going on for Venezuela. But at the moment, it does seem that the Trump administration is taking a very hardline view on all ships going there.
Stephen, really great insights there. That was Stephen Stapczynski, who leads our Asia energy coverage. And, of course, something else that factors into commodity prices certainly is the ongoing talks led by the US around efforts to end Russia's invasion of Ukraine. And to that point, the US Special Envoy Steve Witkoff says the Trump administration officials have held productive meetings with counterparts from Kyiv and also Brussels in Florida. So let's get more on this now and bring in Bloomberg's Michael Heath, who joins us. So, yeah, what do we learn out of these negotiations or these talks, and what's the latest exactly?
Yeah, I mean, the both sides, Ukrainian side and the US side, said that these talks were constructive. And I guess in a sense, it's still sort of this discussion of what would a US security guarantee involve for Ukraine in terms of peace, in terms of a ceasefire, and from Ukraine's side, yeah, what it could rely on in terms of ensuring that if there was a ceasefire, that Russia wouldn't wait a period, rebuild its own forces and come back again, which is what everyone's been worried about. There seems to still be this issue in the offing of of President Trump wanting Ukraine to sort of bow to Russia's maximalist demands for territory, which, you know, they're basically wanting territory that they haven't actually managed to conquer. And the main issue there is there's this sort of whole fortified group of cities there on Ukraine's eastern boundary, and Russia taking that over would basically open Ukraine up to further you know, risks of an invasion later down the track, or you know, resumption of the war. So those same sort of issues seem to be in the air. Meanwhile, the US also was running a separate track. They've been talking to Russia as well. But it basically comes down to that same issue. Is Russia prepared to budge in the negotiations? And it's just unclear at the moment. Particularly, we saw, just going back a couple of days, that Ukraine's opted not to touch, Europe's opted not to touch these Russian reserves. They're going to give Ukraine a loan. And so from the Russian perspective, it's just like, you know, the longer they hold on, the more likely the West fractures or it becomes tired of this issue or whatever, and Ukraine's left to its own devices. That's the big risk. And you know, in fairness to the Trump administration, they're trying not to let that happen, but Russia's not giving a lot. So really, as usual, we're still waiting to see, will Russia come to the party at all?
Yeah, it's really fascinating because I think, of course, one of their objectives is to drive a wedge between the EU and the States, and they seem to be doing a pretty good job of that right now, essentially. So what's the next point that we're watching for, and are there any more talks that are scheduled, or what happens? Because, again, to your point, Russia's not really budging here.
No, and one of the things where the US, or President Trump at least, sort of came on board with Russia was this sort of call that Ukraine should have elections, because the President Zelensky's term has actually expired, but under their constitution, they're under martial law. They can't hold it. And so, you know, President Zelensky said, look, we're happy to have elections. You guys provide the security, which, you know, you obviously can't have it in a war zone. Ukraine's stretched to the max as it is. So, yeah, look, again, it's the question, I guess, is President Trump sort of comes back and forth in terms of his pressure. He's been putting a lot on Ukraine. Does he revert back and go for another round of sanctions on Russia to really say, look, if you guys are going to move, you're going to pay for it? And that could, in fact, move the dial there. But he's held off of that. He's held off of it all year, despite threatening and despite some less severe sanctions. But that's what we'd be looking for, is that he turns the heat back on to Russia and says, look, if you're not going to move, you're really going to have trouble financing your war from here on, which is oil again. You know? Yeah,
it's interesting, because I think if you were to look at where he's put the most pressure on who over the course of this year, it seems to be more on Kyiv than it's been on Moscow.
Yeah, I mean, you know, sort of blaming the victim kind of thing. It's kind of hard to reconcile, but yes, that's how it's been working.
All right, Mike, of course, we'll be tracking this into next year, it seems. Well, that was Bloomberg's Michael Heath there, and the top global headlines that we're following as well. China's criticised the latest US weapons sale to Taiwan, saying it raises the chance of conflict between the two superpowers. The US last week approved arms sales worth up to $11 billion, including missiles, drones and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a power keg. The US has launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapons site. The Defense Secretary, Pete Hegseth, posted on X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying the F-16 fighter jets launched Friday night, bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. We'll have more ahead on the Asia trade. This is Bloomberg. Well, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. The Deputy Attorney General, that's Todd Blanche, says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Well, the latest release of the so-called Epstein files includes thousands of pages of pictures, phone records and notes from investigations, but many of the documents are heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
We're 30 minutes into the trading session for Japan and Seoul this morning, and really there's a clear outperformer, and that's tech so far in the session because it is leading the Asian benchmark higher. Some of the names that are standing out to us, well, you can see SoftBank, for instance, is 7% in the green. Again, it tracks what we had with Oracle, for instance, on Friday. Lots of whipsaw trading for Oracle, but ultimately ended the week higher. And that, of course, these two companies are very much paired together when it comes to the build-out of the Stargate project in the US. Also tracking names like Tokyo Electron, Advantes that are in the green, but it is that story around chips as well, the race for dominance between the US, of course, the leader, but China very much catching up or appearing possibly to be catching up. And to that note, China's More Threads has introduced a new generation of chips that are aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's bring in our China correspondent Min Min Lo, who's in Hong Kong this morning. And Min Min, yeah, so we got the lineup on over the weekend, but tell us about the new products and just make that comparison as well. How far away from NVIDIA's latest generation are they?
Yeah, so the company unveiled two new generations of chips. One is the Lushan and the other is the Huashan. So Huashan is meant for AI inferencing and training, and the CEO says that this is better than the NVIDIA Hopper series chips, including the H100 and H200, and it's closely catching up with the Blackwell series chips, which is the latest generation currently available from NVIDIA. So this is pretty significant. It means that if China can already produce chips that are better than the H200, that eliminates generates any reason for Chinese companies to buy from NVIDIA, because NVIDIA just got approval from the Trump administration to sell the H200 chips to China. We know the Chinese government was, according to sources, assessing demand from Chinese chip makers and asking them to explain why they need to buy a U.S. chip as opposed to a homegrown one. And Mothreads has said that it's ready to go into mass production for these chips as soon as next year. It also unveiled a new graphics rendering chip called Lushan, and a new GPU architecture that it says can link together as many as 100,000 chips in a supercomputing cluster as well that will have at least 50% higher computing power.
And then just on the point of that competition between the US and China, to that end, as you're getting calls from a US lawmaker that dozens of Chinese firms should be listed as Chinese military-linked firms. What can you tell us about that?
Yeah, so U.S. lawmakers from the House Select Committee on China are calling the Pentagon to add another 19 Chinese firms to this Pentagon list that would indicate that these companies are linked to the Chinese military. And it's a very wide-ranging list covering companies from Hua Hong, the foundry, to DeepSeek, to Unity, a robotics company, to Wuxi, which is a pharma company. So they come from many different industries. And it's a signal of that continuing tension or competition between the two sides, because the Pentagon renews this list every year, and one of the few companies, for example, Hersai, was one of those that sued the Pentagon and claimed that they had no ties to the Chinese military, and yet, yes, they successfully got themselves delisted, but they were immediately relisted after that, and it shows you the difficulty in challenging some of these U.S. lawmakers and these labels placed by the Pentagon. It doesn't hold any immediate ban for these companies, but it is a signal to other companies to in some ways warn them against the risk of working with these companies on the list. So something to keep an eye on if the Pentagon do actually agree to those requests.
Yeah, and I think the last update we get on that was in January of last year, so perhaps just in another few weeks we'll see whether, of course, they have proceeded. But that was China correspondent, rather, Min Lo there in Hong Kong, and to the extent that really it also forces that push for self-reliancy, self-sufficiency in China, these escalating geopolitical tensions between Beijing and Washington. We are seeing one of the effects of that is also the chip-making startups in China looking to tap the equity markets as well, because we've seen a rush really to the IPO market. Many of these well-known names like Mothreads, for instance, MetaX have listed recently. But are we looking at the start of a trend now? Could be also what's in the offings. Let's bring in our Asia equities reporter, Sang-Mi Cha, who joins us again today. And Sang-Mi, tell us what kind of names are standing out, and what are we expecting for 2026 on this front?
Well, we're really seeing that insatiable demand in onshore retails when it comes to jumping into those listings and these companies' listings, and a lot of them want to take a little bit of and participate in these IPOs, basically. And we see that MetaX definitely has driven that first rally, followed by more threads. But of course, we have some names, and the traders I've talked to are saying that they wouldn't be surprised to see that DeepSeek moment in chips as early as next year. So we're seeing that technological gap really just narrowing with the U.S. And so the companies that we're looking at, of course, is Byron Technology, that is, and also the companies like Iluvatar, CoreX. These are the domestic chip makers that are actually the closest to NVIDIA's technology. They make GPUs, and we have Kunlun, the chip arm of Baidu. And so Baidu was actually the worst performer among HS Tech, but because of this news, it has actually gained and rebounded quite significantly after the Hong Kong IPO news. And of course, we have other companies in the memory space like Yangtze Memory and the YXMT. And these are the companies that make DRAMs and NAND, which was for a long time dominated by Samsung and SK Hynix. And we have other companies like Giga Device and Montage. These are the companies that are already listed in an onshore stock market, but they're going for the Hong Kong listings. And we see that their share prices are quite, the valuation is just a lot cheaper. So there is more room to grow when it comes to Hong Kong listings. And so they are more in the realm of those picks and shovels when it comes to the whole AI supply chain spectrum.
Yeah, we're certainly starting to learn more parts of the semiconductor ecosystem in China, but let's also shift to really, in comparison to the tech and all the positivity we've seen around the tech sector, the consumer sector has been standing out for perhaps the wrong reasons. But what can you tell us about that losing streak we're seeing in Chinese consumer stocks?
That's right. Onshore consumer staples index has fallen this year, and it's about 4% decline. So that might not sound that little, but compared to CSI 300, which just rallied about 16%, that is a stock divergence. So it's kind of like the whole Chinese market is rallying, but then the companies that are selling to these average Chinese households are actually going the other way. And we see that in companies like liquor stocks like Mao Tai and Oolong, which all have fallen significantly. And these were the proxies to Chinese wealth and economy. And we see that structural change happening in this space. So analysts are saying that this is not a cyclical slowdown, but they're saying that this could continue for a couple of years. And we see that in BYD and Media Group. So these are automakers or appliances makers. So in the past, it was more of, isolated from all these macro events, but these persistent deflation and the property prices was just so low has been prompting the households to tighten their belt.
Chinese equities make up a large part of the EM index overall. And we are seeing a lot of bets, really, and a greater performance, really, for EM versus even the States. Do you see that extending into next year, and what are you hearing from traders?
Yes, absolutely. We had a BOFA head of EM fixed income who said EM bears have gone extinct. So this just speaks for itself. It's not just stocks. The EM stocks have outperformed the U.S. stocks for the first time since 2017. But it's really not just stocks. We've seen the profits from the carry trade strategies have been the best. They have logged the best profits in 15 years. And we are seeing so many just corners of opportunities in the EM space. And all of these reasons point to the weaker dollar and, of course, the explosive AI investment. EM is exactly the place where all these components, metals are in terms of AI trades. And also just because a lot of the portfolios have to shy away and shift from the U.S. assets. And investors are saying this is something that will continue for multiple years. And JP Morgan is saying that they project about $50 billion of inflows into EM funds next year.
Sang-Mi, thanks so much for joining us this morning. That was our Asia equities reporter, Sang-Mi Cha in Hong Kong. And another standout market in the EM space has been what we've seen in Indian equities as well this year, and a lot of traders continuing to bet, and investors as well, on that performance into 2026. But let's talk about really the trade story, given that this is one of the major economies that still hasn't signed any deal with Washington so far. And on that, the Indian government has pushed through far-reaching policy reforms in the final parliamentary session of the year. Again, that's as the Prime Minister Narendra Modi is looking to boost the economy in the face of those trade headwinds. Our economy reporter, Swati Pandey, joins us now for more. So, Swati, was this a surprise, or were we expecting some sort of support for the economy going into next year?
In one sense, it is a surprise because Narendra Modi started the year on a very sluggish note. And if we look at data, this was the most productive winter session of Parliament in 5 years. They have passed 8 bills. So it really just shows that momentum, that escalation in reforms that they really need to do, given, as you mentioned, that they have not signed a trade deal with the U.S. yet. India has got 50% tariff, which is among the highest in the world. The rupee is the worst performing Asian currency this year. It has tumbled a lot against the US dollar. So not a lot is going in India's favor, especially if given the dream that Narendra Modi has of making India a developed economy in just 2 decades from now. So they really need to unlock this long-term capital and boost economic growth.
Do you think those reforms will manage to do that? One of the areas, for instance, they're targeting is semiconductors. Is this going to really be the type of policies that investors want to see to then, again, put their money into the market?
Look, so far the feedback has been quite positive. We have already seen investments come into India from Japan in the financial services sector. We are already seeing, for example, in the nuclear sector, Asia's second richest man, Gautam Adani. His Adani Group is in talks with one of India's states to build a nuclear reactor. So those conversations have already started. Reform usually takes time, and the impact of those, unlocking of capital and all of that, it takes time in an economy, especially as fragmented and big as India. So we are not going to see anything happen overnight. But yes, it is a much needed step that was needed in the right direction as well.
Still not without its detractors, though. We did see some criticism being levelled on a number of different fronts. What can you tell us?
Yes, one of the criticisms is that some of these legislations were really rushed. For example, they have tried to unify the labor laws and codify into 4 codes. Now, that was a thing that a lot of people had been asking for, businesses had been asking for, but there are questions around whether it really serves the people, right? The other thing is that India is having problems with signing a trade deal, doing negotiations with other countries, and like some states which are very manufacturing dependent and export reliant have criticized the government for not doing enough to support their businesses or their industries, and maybe not do enough to basically extend that hand and get those negotiations going and actually sign the trade deal. So there are a lot of issues still, and but I feel like these these steps that the government has taken were much needed, and if it really does unlock that long-term capital and boosts economic growth, economists have boosted their expectations as well. So it's roughly 7% annual growth expectation now. It's still below the 10% the 8% plus that is needed to make India a developed economy, but 7% is not bad either. So yes, there will be criticism, but it's a step in the right direction.
Yeah, not many economies growing at more than 7%. That was our economy reporter there, Swati Pandey, joining us, and we'll have more ahead on the Asia trade. This is Bloomberg. Well, the 7-Eleven operator, that 7-I, is pressing its US convenience store business to deliver a faster turnaround as the retailer seeks a public listing of the unit. Let's get more with our Bloomberg senior editor, Reed Stevenson, who joins us again now from Tokyo. And Reed, so seems like this is resting on 4 key initiatives. Can you outline those for us, and also some of the challenges that the company might face in executing those?
Yeah, indeed. I think the top one there is going to be private label. If you walk into a 7-Eleven store here in Japan, you'll see, many of the things, especially the food, is made by or at least branded as 7-Eleven products. In the U.S., that's still sort of, it's always been around, but it's a work in progress. So that's the key thing. The other is the supply chain, larger format stores, and other initiatives. And all of this is really, meant to sort of go toward convincing investors and potentially new investors in a publicly listed U.S. Listing for 7-Eleven that, the company still has a lot of runway to grow.
Yeah, so it's new CEO Stephen Darkus who took that position about 6 months ago. He's saying that they want to actually get not just an IPO on schedule, but they also want to maximize shareholder value. So how exactly do they go about doing that, and do these initiatives put them in that right direction, do you think?
Yeah, the U.S. is really just one part of a much larger sort of shift happening within the company. A lot of that was sparked, over the past year and a half by the unsolicited approach by Couche-Tard of Canada, the operator of Circle K stores, with a 4.7 trillion yen buyout offer. And essentially, although that never consummated in any deal, that accelerated efforts within Seven & I to really try and restructure itself to deliver value to shareholders. Effectively, the company kind of split off and sold to Bain Capital its grocery and specialty store business. There's new leadership in place. And then, of course, this U.S. turnaround. And, the U.S. for Seven & I, the Japanese parent, although it essentially, took over the original 7-Eleven concept, has always been sort of a tricky kind of business for them. Essentially, over the past 5 years, they aim for growth through acquisitions. So Speedway is part of the group. They bought that from Marathon Petroleum, or Marathon Corp, a few years ago for $21 billion. They also have Sunoco gas stations in the network. And so it's got scale, but what it really needs to do is to sort of squeeze out profit. And that's really tough in a U.S. environment where inflation is biting into people's wallets.
Yeah, exactly. I mean, we saw that reflected in the latest consumer sentiment survey from the University of Michigan, just that impact on the hip pocket. But what about the timing of this IPO, and how much money do you think they'd be looking to raise?
Yeah, in terms of the amount, the company hasn't really publicly given a figure. They've given a rough time frame of the second half of 2026, but when we spoke with Stephen Dacus, he said, look, this is not going to happen according to a schedule. It's going to happen when they have essentially a value proposition for investors. And so we're just going to have to see how all of that plays out in the next year.
Reid, great to have you with us again. That was our Bloomberg senior editor, Reid Stevenson, there. And let's just check on markets as well, because we are about 50 minutes into the trading session so far for Tokyo this morning. We're actually seeing stocks that are moving higher here today. They're being supported by a couple of different factors. Firstly, you've got that Japanese yen weakness. We had the interest rate hike, of course, from the BOJ on Friday. We also had Governor Ueda signaling there's going to be further tightening ahead. And so we did see the Japanese yen tracking back to that 157 mark. We're also having a look at the bond space, because we have seen fluctuations there, but the two-year yield rising to this level here. It's the first time we've seen it at that point since 1997. So again, that historic tightening campaign from the BOJ. The Nikkei 225, again, benefiting from that Japanese weakness or yen weakness, but also that rebound that we saw in tech stocks in the US to end the week. The likes of Oracle, for instance, jumping 6% in the US session on Friday. We're seeing SoftBank, again, one of the big gainers so far, in fact, contributing the most to the gains in the topics so far today. We'll have more ahead. This is Bloomberg. Taking a look at European stocks futures this morning, we're actually also seeing President Trump there. You can take a look at that imagery, but essentially the top corporate stories that we're tracking, because the pharmaceutical sector very much the focus. So that was him there speaking with some pharma executives. But in the equity space, we've actually seen European stocks closing at a fresh record high on Friday. So wrapping up the final full trading week of the year with optimism around further policy easing, resilient growth as well in the US. So utilities, energy, healthcare stocks among the big gainers in the session on Friday. But again, let's stick with that pharma space and the healthcare space and shift back to the top stories that we're tracking today, because President Trump, we just saw that vision there, but announcing deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK came in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar: Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year. Exceeding last year's total. The top 5 foreign films have generated about $850 million. Let's take a look at what we're setting up, or how we're setting up for the mainland session. Hong Kong, mainland China, opening in about 35 minutes from now. But it's interesting to note that strength we've seen in the box office and the cinema scene in China against what has been weakness across the broader consumer category, because Chinese consumer stocks, for instance, looking at their longest ever stretch of annual underperformance with the sluggish economy, policy uncertainty, where we do have a lot of optimism, continues to be in that tech space. And we were talking earlier about the amount of Chinese chip makers that are possibly looking to IPO and tap the equity markets into 2026. Again, going into the open today for Taiwan, you're seeing upside there, position for a 1.5% gain. But names like Tokyo Electron, for instance, SoftBank, are gaining so far in the Tokyo session. That's it from this session of, or this show rather, episode of the Asia trade. As we look ahead to the market opens, also taking a look at what's happening in the commodities space, you're seeing gold and silver in particular hitting a fresh record high. More ahead. This is Bloomberg.